What's going on everybody? So in this video, we're going to be talking about the Arbitrage Bands Indicator. Now, the Arbitrage Band Indicator is an indicator I use as a part of my edge in the market. It is an indicator that I use to confirm short and long-term trends for any forex pair, cryptocurrency, stock, commodities, and more that can be found on TradingView. This is a paid indicator that cannot be found on Telegram unless you pay for it, and it is sent to you by the creator, Royce Wells. And this is what the indicator looks like. Now, right now you just see a whole bunch of squiggly lines, but we're going to go ahead and dissect these bands. And so this is what it looks like when the bands are sent to you, and this is where you find them. You're going to go under invite only scripts, and you're going to get a list of these 5 indicators. I'm going to be explaining to you what they all do one by one. Dissecting the bands. There are multiple aspects to the bands that can be fully explained in detail as to how arbitrage, which will now be referred to as Arbi, works and why it is so useful. This indicator, just like every other indicator, is just that, an indicator. You must practice using it and backtest it in order to find what works for you. It took me months of backtesting before I got a hang of the indicator to fit my own style, and so I encourage you to do the same thing. Arbi is a lagging indicator that works on high probability opportunities depending on the time frame. Naturally, the higher the time frame, the stronger the indication of the trend, but it is always wise to use your technical analysis as further confirmation. Now, let's get to dissecting. The compass line. The compass line is the blue line on Arbi that leads the momentum line. The compass line is one of the most important parts of the arbitrage bands, as it is what triggers the buy or sell alerts. But we will learn about that as we move forward. Here is what the compass line looks like. It is that blue line that you see moving along with price. And under the arbitrage band settings, under the inputs, you will show the compass, and that was what you would toggle to turn it on or off. The momentum line. The momentum line is the red line on Arbi that follows the compass line. The momentum line is the line that confirms the signal that the compass line gives. Again, we will get into more detail about its use later. Here is what the momentum line looks like. It is that red line that moves along with price, kind of like the compass line. And under the arbitrage bands inputs, for you to toggle on or off the show momentum, you'll click right here. As I mentioned, the momentum line follows where the compass line goes. When the compass line is above the momentum line, that means that price is bullish. When the compass line is below the momentum line, that means that price is bearish. And so we have an example of the momentum and compass line here. Over here towards our left, we can see that the compass line is above the momentum line, and so price was on an uptrend. Here we can see that the compass line is below the momentum line, and then that made a downtrend. Here we can see that the compass line is crossing above the momentum line, and that started an uptrend. Here we can see the compass line is crossing under the momentum line, but then price just consolidates. And we have here where we have the compass line crossing above the momentum line, but again, price is consolidating. So this just shows you don't want to use this as the only confirmation for you to get into a trade. The mean line. The mean line is the line on Arbi that is in the middle of the bands. The mean line is the line that always maintains in the middle of the entire indicator. Usually, in the middle of the bands, price will stop and use it as a support or resistance, depending on which way the trend is going. Here's an example of the mean line. And you will use show mean line to toggle on and off the mean line. This is showing the mean, compass, and momentum lines together on the chart. As previously mentioned, the mean line is used as a level of support and or resistance when price gets to that level, as it is in the middle of the RB bands. So here we can see that price had used the mean line as a support. Here we can see it's done some interactions until it finally broke to the downside. Here we can see that price had used it once as support. Here we can see that price had used it once as a resistance, but then it consolidated and used the mean line as a support to go bullish. And then over here we see that price is just consolidating on the mean line. Usually, if price crosses over from the bottom of the mean line to the top, then price will continue going bullish. And vice versa if price crosses under from the top. The RSI line. The RSI line is the line on RB that triggers the buy and sell alerts. The RSI line cannot exit out of the bands, and the highest or lowest they will ever go is in the upper and lower danger zones. You will know what I mean by that soon. So here we have an example of the RSI line. And you will toggle the RSI line on and off by pressing here. Here we have the RSI line with the compass, momentum, and mean lines. We're going to see what exactly happens when a buy or sell alert is given. Here we can see that the compass line is crossing over the RSI line. Once it does that, a buy alert will pop up. Here we can see that the compass line is crossing below the RSI line, and here is where a sell alert will pop up. Here as well, where we can see the compass line crossing over the RSI line, that will make a buy call happen. And once we see that the momentum line has crossed over the RSI line as well, that is our confirmation. And right here as well, we can see that the compass and momentum line has crossed under the RSI line, which will then alert a sell. Let's go ahead and take a look at some real examples. So once the compass line crosses under the momentum line and the compass line crosses under the RSI line, wait for this candle to close and then the sell alert will be printed. Same thing with buys, just the inverse. Once the compass line crosses over the momentum line, and once the compass line crosses over the RSI line, wait for this candle to close, and then the buy alert will be printed. Upper danger and lower danger zone, otherwise known as UDZ and LDZ. The upper danger zone and lower danger zone are the parts of the arbitrage band that the RSI line cannot get out of. The RSI line cannot exit out of the bands, and the highest or lowest they will ever go is in the upper and lower danger zones. The UDZ and LDZ move according to how price moves. They can also be used as areas of support and resistance, but its main use is to hold the RSI line in the bands. Let's go ahead and take a look at it. So here we can see all the interactions where price had used the upper danger zone and the lower danger zone as support and resistance. Here, price used the lower danger zone as resistance. Here, price used the upper danger zone as support. Price used the lower danger zone as a resistance here, but then used the lower danger zone as a support before it went bullish here. Price used the upper danger zone as support here, while here it used the upper danger zone as resistance. So that's what I mean by the upper danger zone and lower danger zone can be used as support and resistance, because price does quite often respects it. And under the settings, this is how you toggle your danger zones on and off. When the RSI line enters into the upper danger zone and lower danger zone, that is a sign that price may be either overbought or oversold. Since the RSI line cannot exit out of the upper danger zone or lower danger zone, the zones will adjust themselves as price moves until price comes back to the RSI line. As we can see here, we can see how we have multiple times where the RSI line comes into the upper danger zones and lower danger zones. And then once it holds in there, you will see that it turns around. So let's take a look at the real example. When you see that the RSI line is at the lower danger zone, that is a good time to start looking for buy opportunities. When you see that the RSI line is at the upper danger zone, that is a good time to start looking for sell opportunities. The RSI line can stay in the upper danger zone or lower danger zone as long as it needs to, but that is when you have the highest probability to take short or long trades. Here we can see that price is riding on the RSI line and upper danger zone. In consolidating markets, the RSI line evens out and the upper danger zone and lower danger zone shrink until price goes one way or another, like an impulsive move. That is why you see multiple alerts here. The band, or as I like to call it, the cloud. This is what the upper danger zone and lower danger zone line up with. This is known as the core of the band. That's what it just looks like. It just looks like the core of the band. And you can toggle it on and off by pressing Show Band. This is what the cloud looks like with the rest of the parts of Arbi. I personally don't leave it on, as I know that the upper danger zone and lower danger zone are the exact top and bottom of the band. So that's what it looks like with the band on. Colors of the candlesticks. With Arbi, there are different color candlesticks that tell you what kind of pressure each candlestick is printing has. There is magenta, white, blue, yellow, and green. Here we have the colors. Magenta candlesticks mean that there is extreme bearish pressure incoming in the market. They don't show up that often, so when they do, expect a bearish move incoming. Blue candlesticks show that there is bearish pressure in price. Blue candlesticks show that there is a bearish pressure in price. These aren't as strong of an identification of an incoming bearish push as magenta, but it is a good alert. White candlesticks show neither bullish nor bearish pressure is in the market. These candlesticks don't really tell us anything. Green candlesticks show extreme bullish pressure in the market. These don't come by very often, so if you see green candlesticks, you may want to look for buys. Yellow candlesticks show bullish pressure in the market. These candlesticks aren't as strong as the green candlesticks, but these are the opposite of what the blue candlesticks identify. And this is how you toggle on and off the show candle colors. Now, here is what everything that we have gone over looks like all together. Here it is without the band, as I like to have it. And this is what it looks like with the band. Some people like it this way. I personally do not. Deviations 2 and 3. Deviation 2 and 3 are parts of the Arbi indicator that show further support and resistance of the bands. I primarily use these as places to take profits or to watch for possible turning points when price is overbought or oversold. This is the second deviation that shows that price is overbought on the top. This is also the second deviation that shows that price is oversold on the bottom. This is the third deviation that shows price is majorly overbought at the top. And this is the third deviation that shows that price is majorly oversold at the bottom. And if you want to toggle your deviations on or off, you can come over here to show deviations. When price touches the deviations 2, that is usually a good sign to take a large portion of whatever position you have opened, as that means that price is either overbought or oversold. If price touches the deviation 3, then that is when I will take all of my profits, depending on what time frame I'm on. And here we see the deviations with all the other parts of the bands. And here we see the deviations without the band. Here is where price started its uptrend after coming back into the deviation 2. And when price finished its bullish move, it came slightly out of the second deviation, but since price was overbought, price started to retrace. Price came back up close to the second deviation again, but then ended up dropping again as price is in an area where it can turn around. The different sizes of the bands. There are different sizes of the bands that you can use depending on your style of trading and what works for you. The list of these different sizes of bands, from smallest to largest, are the Scalp, Compass, RSI, Arbitrage, Novice, Intermediate, Advanced, Apocalypse, and the newly added Infinity bands. There is no right or wrong band to use. It is all up to you, the user, to decide what size of the bands you would like to use. Here are the different bands visually. Here we have the Scalp band. We have the Compass band, the RSI band, the Arbitrage band, the Novice band, the Intermediate band, the Advanced band, the Apocalypse band, and finally, the Infinity band, the largest band of them all. The Infinity or Apocalypse bands are the largest bands amongst the rest, and so they alert the slowest and least frequently. The Scalp bands are the smallest bands amongst the rest, and so they alert the fastest and the most frequent. This applies to the other indicators that come with the RB bands as well. The Apocalypse is the slowest, while the Scalp is the fastest. And that is Dissecting the Bands.